Hey everybody, Kurt Henry here, mortgage broker at the Mortgage Center, and we're your go-to mortgage broker in the Durham region. This is a weekly mortgage market update just to let you know what's going on in the mortgage market. So one of the main questions we're getting right now is if I'm in a variable rate, should I lock into a fixed rate? So the answer to that question is that it depends. We believe that there's 7 things you should consider if you're thinking about locking into a fixed rate. Number one is just remember that historically speaking, variable rates are generally better as it relates to the amount of interest that you pay on your mortgage over time, over the long term, versus fixed rates. Second thing to consider is that mortgage rates will always go up and mortgage rates will always go down. Number 3 thing to consider is a potential strategy. So a strategy could be, if you're thinking about locking into a fixed rate, check what your lock-in rate would be. So when you have a variable rate mortgage, normally it's a 5-year term. Let's just say you're 1 year into the 5-year term, which means you have 4 years left. So that means you'd have to lock in typically at whatever the 4-year fixed rate is at the time of locking in. So the question is, what is your current lender going to offer you as far as what that 4-year fixed rate is going to be? And that's the question to ask the current lender is, what is my lock-in rate going to be if I do lock in? Number 4 thing to consider is to run the math. What does that mean? So run the math means, what is your payment on your current variable rate mortgage? What is your payment at the lock-in rate? And what is your payment on your variable rate if it increases another, say, 1.25% as an example? So that's running the math. And we can help you with that, of course. So feel free to reach out. I'd be happy to chat with you if you need to talk about that. Number 5 thing to consider is to call us to discuss. You might say, well, what is there to discuss? Well, if your current lender is offering you, let's say, a lock-in rate of 5.3%, but maybe we find that we can get you a lock-in rate at, say, 4.5% with a different lender, there might be a conversation there to see if you should do, if you're going to lock in, if you should do it a certain way versus, a different way. Number 6 thing to consider is if you do lock in, just remember that rates might come back down, and in some cases are expected to come back down. The question is when, and because it's all kind of connected with inflation. What we do know is that there was an inflation report in Canada as of today, August 16th, that showed the rate of inflation was lower in August versus previous months. So there is some good news starting to happen there, although it is taking time. And number 7 thing to consider is, what does your liquidity look like? So do you have liquidity resources or sources of funds in this period of time? So when I'm talking about cash in the bank. If you don't have any cash in the bank, then of course life can be a little more stressful than if you do have cash in the bank. So if you don't have cash in the bank, just know that there can be a way to release some equity in your home to get you cash in the bank so that you can get through this economic cycle. And if you have any questions on that, feel free to reach out. Of course, just keep in mind that as the Bank of Canada increases rates, the stress test and therefore the ability to qualify for extra funds can become a little more difficult. So that's why considering your liquidity reserves now might be better versus considering that in, say, a month or 2 months from now. So if you have any questions on that, feel free to reach out, and we're always here to help.